GM, good morning. Welcome to the Milk Road Show. Milk Road Macro. Welcome to Milk Road Macro, everybody. The daily crypto show that hits you like a pool exit into full sun. Instant clarity. Let's go. I'm your host, Jay Hamilton. It's Thursday, May the 8th, and markets are ripping this morning. Why? Trump has announced a US-UK trade deal. We're going to talk about that. The Fed is not moving, but markets are doing all right. Are the Fed playing with fire? What's going on in the US economy? What's the data showing us? And where do we think the Fed might go next? China is cutting rates. Where's the signal amongst all this noise is the question that I know you're all asking. And today we are joined by one of the best in the space, Dan Tapiero, founder, CEO, CIO, managing partner at 10T and many other funds that he manages. I can't even keep track of how many funds Dan has these days. He's invested in over 20 crypto companies, deployed over 1.5 billion, and he's one of the only growth stage investors in the crypto and blockchain space. He's also a renowned macro investor. Before we jump in, we are looking to hire a podcast host right now for this exact show. So if you want to host Milk Road Macro and join our team, hit the link in the show notes, or if you know somebody that you think would be a great podcast host to join our team, let us know. Also, if you want more macro content, hit the link in the show notes to sign up for our waitlist to join our upcoming newsletter. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, Dan, welcome back to the Milk Road Show.
Glad to be here. I just posted it on Twitter, so hopefully that works. Sometimes, for some reason, X, there's this delay now in things that when you post. So hopefully the delay doesn't last very long.
There's no room for delay in this world, Dan.
Well, I know. Well,
everything must be immediate. It must be.
I'll check X just to make sure that it went through there, and that's what we wanted. So,
I mean, as long as you're here and your hair is looking nice, we're all happy.
It's all about the hair again, huh? It's all about the hair. Well, I mean, Dan, I always say my wife married me. Well, she always says for my hair and for my shoulders and, everything else, whatever.
Okay, well,
that's what happens when you're married 26 years.
I'll get your wife on the show to get the real reason that she married you.
That's what she'll say. That's what she'll say.
Let's start with, I want to set up a little scenario for you, Dan. You and I always have some fun when you come on the show. So let's say you've got a friend who went into a coma around January 1st, start of the year. So they've been in a coma. They just woke up from coma. They've missed Trump's first 100 days in office. They've missed everything that's happened so far this year. First thing when they wake up, their wife goes in, tells them all.
How long have they been in a coma?
Since the start of the year. Okay.
Not since November 1.
No, not since November 1.
Okay, all right. Okay.
Since the start of the year. So they know that Trump won, but he hasn't been inaugurated yet. Nothing's happened. Markets are ending the year strong. Their wife comes in, gives them all the headline news. Tariffs. You can't believe this. Trump did this, blah, blah, blah. Then you walk in. They open their portfolio and they ask,
who the hell's that?
What's going on? Yeah. You're the friend.
That guy? What's that guy doing in my room here?
Who's that guy with big shoulders and great hair? So you walk in and they ask you.
Did you say gray?
Great.
Okay. You walk in and they say, "What's going on in macro and markets?" What are you telling them amongst? You're not trying to tell them all the noise. What are you telling them?
Jay,
to get them up to
Bitcoin's 100,000.
Yeah, nothing happened.
Bitcoin's 100,000. So you could argue, okay, is that surprising or not? But we were headed there for quite some time. I think, look, the summer of 23, when Larry Fink changed his mind about Bitcoin and said BlackRock was going to come with an ETF, that was essentially the end of the bear phase. I mean, it really bottomed after FTX in Q4. And then, the release of all those ETFs in January of 24 and the Trump administration change, I keep saying that the Trump change of view and approach to our space is the second most important event in the 15, 16-year life of Bitcoin, cryptocurrency, blockchain, Web3, digital assets, whatever you want to call it. And that's because we've never had a government be supportive in the way the US is. And not only that, it's that the US is the most important, wealthiest country in the world. And, they have a mission now, as stated, to become the world's leading cryptocurrency blockchain hub. I mean, this is mind-boggling. This is part of their platform. 9 months ago, companies in the space, all sorts of projects were beleaguered, literally beleaguered, being attacked by the SEC, being sued for this thing or that thing. And then all of a sudden, new administration, and those suits have been dropped. I mean, it's pretty incredible. It's the most, dramatic 180-degree change in a view that I can think of, certainly in my lifetime, but I mean, in the financial markets. And what's happened is that the credibility, the trust that sometimes is lacking in our space, you have characters like FTX, doing damage, but the trust that, that we still need to regain in the space, I think that the Trump's move and their platform has brought a lot of that trust, back, I would say. I mean, I'm not in love with the whole meme coin thing that he did. I understand it. And I think it makes some sense, maybe to discuss at a different time. But the reality is that, Bitcoin at 100,000 with these positive developments, if the short interest rate, which is 4%, were at 2%, for instance, I think Bitcoin would probably be at 200,000. The economy is slowing. You asked me about, the US economy is slowing. Inflation is not a concern. I'm not sure what Jay Powell is doing. I think Trump's view and Bessent's view is right. Bessent said, hey, the 2-year is at 3.79, the fund rate's at 4.25. He said the 2-year is telling the Fed what to do. And that's exactly right. I think that the data is slowing down enough that we're going to have an interest rate drop down, hopefully below 3 on the Fed funds. The 2-year will lead it there. But look, we've also just had a 10% drop in the dollar against the euro, and that's helpful. I think the dollar is probably entering a bear phase. I was wrong on the dollar earlier in the year, and last year I thought it was going to be very strong. But the reason I've changed my view is because the fiscal policy that they're taking on, okay, the Doge, not just eliminating whole government offices, but reducing the spending in those government offices, plus, the tariff situation, which acts as a fiscal tightening, that needs to be offset by some sort of monetary offset to keep things in balance so the economy doesn't have too aggressive a pullback in liquidity, in demand side drivers, right? So it's like fiscal policy has been contributing to demand, and now it's not. And I think monetary policy needs to offset that. And the dollar is already sensing that. And that's why it's weakened. I think last thing I'm going to say, ideally, in a perfect world, Bessent and Trump or whoever should have gone down to Jay Powell and said, hey, guys, we're going to be undertaking the greatest fiscal tightening of the last 50 years. Give us some slack on the monetary side. Like, hey, let's work together on this. That would have been, and maybe they did do that. I don't know. But Powell, for whatever reason, is really holding back here. And I think he's, the next few months, the data will just, confirm that he needs to move. And that'll help Bitcoin and the whole digital asset ecosystem, ETH, Solana, the whole world sort of take off again. Because there is a part of our world that is driven by this liquidity from the old world, right? Regardless of the good fundamentals that are relating to Bitcoin, regardless of the good fundamentals relating to some of the other projects and, the activity in the space, the growth of DeFi, stable coins, even NFTs might be coming back a little bit here. So I think you just have a little bit of liquidity from the old world come in. You have Bitcoin head up to, my target has been 180 for a long time, like the last, since the bottom, really, that was sort of my target. But most guys on X are telling me that I'm way too conservative. So,
Yes.
what can I tell you?
The next few months, you talked about, okay, especially if Powell doesn't do anything, the data is going to get worse. There's a lot of people that are still saying, we're going to get a recession. I think this is what confuses people is prices are going up, yet everyone's like, hey, we're about to go into a recession. As you said, growth is slowing. And I'm just curious,
Prices of what is it are going up?
Like Bitcoin and
Yeah.
stocks, like everything is green today, pretty much. And so it's I think it's confusing for people. And I'm just curious, like, do you think we priced in this potential recession?
So
Do you actually think we get it earlier?
Discounting mechanisms. I mean, that's the thing people have a hard time understanding. When the VIX was at, what did it get to, 50, 60?
Yeah.
That priced an extreme moment of fear. And I would say, acted as the sign, the signal to the authorities that, okay, things are too tight. What happened? 2-year goes to 379. The dollar drops 10%. The markets themselves act as self-regulating mechanisms. They're self-correcting. So I think that action, that the market action started to ameliorate the fiscal tightening. And that's why Bitcoin also started to improve, because that was the sign, as you remember, Powell kind of softened a little bit. Trump softened a little bit on the tariffs in China. The markets told them, okay, guys, you went a little too far too quick. Now, I know Paul Tudor Jones came out yesterday and said, oh, the markets are going to go back down because fiscal policy is too tight. And monetary policy, he's sure Powell's not going to ease. Well, Paul is one of the 2 or 3 greatest macro traders of all time. So it's hard to take a view against him, but I don't see that happening. I think that was it. And maybe we have a retest, maybe something happens, but I think pretty much that was the extreme. The markets priced it in.
Right. So do you think that bad news moving forward is actually good news for markets, because that's just more strength for Powell to actually finally pivot? Or what do you think?
Yes.
We're probably going to get more bad news in terms of the economy over the next, let's say, month or two.
Right. So I think bad news to a degree is good. I think the unemployment rate going from 4 to 5 is good. And the unemployment rate going from 4 to 7 is probably not good. Right. So it's about degree and extent and speed.
Gotcha.
But I think we're on plan for like a slow slowdown, right? I don't see, China's been slowing. And then don't forget the rest of the world, which many Americans do. China has been slowing much more severely. They just cut interest rates 2 days ago. I put a tweet out there on that. Now their short rate is 1.3%. So 1.3, imagine if the US were 1.3. Bitcoin, could be 200, 300, I don't even know. But they're really concerned, of course, that the tariffs impact them more. Remember, trade is a sort of smaller percent of what we do. So they're concerned. The ECB has already cut interest rates, right? Was that a month ago or 2 months ago, whenever they did it? So that's the rest of the world economy. They've cut. And also that's supportive of liquidity, global liquidity. And that's also supportive of Bitcoin. So some part of this recent rally is also that other central banks have acted.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security, backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial. Put your treasury cash to work, earning native yield and protocol rewards. built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. So did you watch or have you dove into the Fed meeting yesterday?
Not really. I mean, look, I'm
before I ask
spend
you a question,
all day, every day in crypto blockchain stuff. I don't really look at the old world that much, except I check in on my Bloomberg. I see the gold price exploding up here at 3,300, 3,400. I think that's just fantastic because I'm also still involved in gold quite a bit. And as long as the stock market's sort of holding in, I think we're fine, So I don't, the Powell's comments and this and that, he'll cut next time or the time after. He's just waiting for some employment data. So, but I did read one comment on it that like, he's never said nothing more than he did yesterday.
100%.
One of my partners said that, Tad Smith. Tad said, can you believe it? The guy said nothing. I've never heard him say nothing as much as he did yesterday.
That was our summary of it too. Our community was like, did anyone watch? And there was literally no reason to watch it. It gave you absolutely no information.
That's the old world, guys. Focus on the new world. Slow. Come on.
Before we focus on new world, because we will obviously get into crypto, I just have a question around tariffs and this sort of like trade war that's going on. I'm just curious your framework of it. Like, is this a bad thing? Is this a good thing? Both just generally, and then also bring it back into crypto. Did this end up being a good catalyst for Bitcoin and crypto? I feel like it actually was.
Yeah.
But just curious your general take on it and kind of where we're going with it.
Yeah. Well, there are two parts. I mean, the second part is, look, obviously Bitcoin doesn't have a geography attached to it, doesn't have a fiscal policy. There is no government. It's independent of all governmental, tips. So if one government is unhappy with another one, maybe it impacts the currency, maybe it impacts the underlying economy, but Bitcoin is outside of that. So yes, it's helpful in that sense. But in the other sense, to me, I just see it as I said, fiscal, not austerity, but fiscal tightening. It's a damper on growth. If there's going to be more of a tax on a certain consumer product, maybe that reduces the demand. Also, importantly, it creates uncertainty. So people just don't know what to do. Mm-hmm. And uncertainty slows growth. So that's another thing, right? Uncertainty in and of itself slows growth. And slowing growth is what we want, right? So that Powell doesn't have to worry about non-existent inflation.
Do you think, let's say, we just had our first deal that, I don't know if the deal is actually done today or not, but with the UK, it appears. And let's assume that more comes from here. What happens with growth once all those deals are kind of figured out? If we, let's say we have a resolution with China, is it kind of back to where we were and growth is going to pick back up and the business cycle will pick back up? Or do you think there's now do you think there's more long-term damage from everything that happened here? Or what's your kind of on the business cycle?
Well, trade, net, some aspects of trade will be hurt. Some will benefit. My guess is net at the end of the day, it could be a wash or maybe slightly positive for us because it also cements relationships with partners who are real partners as opposed to adversaries. The UK is a real partner. Australia is a real partner. Canada, hopefully we can, have that cleared up too. Mexico. So maybe the strategy here is like isolate China, come to them at the end, do a deal with India. That's great news. I mean, India in the next 20 years is probably a more important economy than China too. I mean, a lot of people argue that. So I think this is just a way for the US to just, maybe align things, maybe not more even in our favor, but just to have things more balanced, and I just, look, these kinds of developments take long periods of time to actually know the ultimate impact. So I think when the VIX hit 60, that priced in the maximum amount of uncertainty and fear about what the impact could be. But then we'll see the impact develop over, multi-years. But as I said, all I think it does is it takes the edge off of any inflation fear. And then also, look, the reality is if you look at what AI is doing, that is massively deflationary. I don't know why the Fed hasn't done more homework on this. I just give you an example. We have invested in 23 companies. The firm has 11 board seats. I was sitting in on a board meeting yesterday for one of our companies, and they said, listen to this, that all the coding that's done internally today, 40% of it is now done by AI. A year ago, that number was basically zero. So those coders, they don't need those coders anymore. That's in 1 year. I mean, that's a pretty dramatic change. So I think AI, you listen to Eric Schmidt, he's on, YouTube a lot now talking about this. It could be the most massive deflationary force we've ever faced. And here we have a central banker who's 75 years old, worried about the CPI number. It's absurd, right? It's absurd. I'm not saying he's not a smart guy. He's not trying to do his best, but the Fed is a centralized old institution that does a lot of stuff with they have a lot of math, they have a lot of models, but there's a lot of gut feel. There's a lot of, I'm feeling this and feeling that. Well, why aren't you feeling what the hell's happening with AI? Well, are you kidding me? I went from thinking I needed to hire 5 people. One of my partners was like, Dan, we don't need anybody. I'm like, really? How are we going to work that out? Who's going to help me write my investment memos? He's like, AI, I'll do everything. And then what is it I heard the other day? Was it Elon said in 10 years, there are going to be 100 billion robots, and that services and goods were going to be free, essentially. So that's deflation. If a service goes from being cost something to being free, he says the big challenge for human beings is philosophical, is what are we going to need to do with all of the time that's going to open up, because everything is going to be automated. And robots are going to do everything for us. Look, and he's not the only one saying that. They're talking about what AI is going to be like 2 years from now, 5 years from now. It's crazy. We've been pursuing intelligence, the species has, from the beginning. And now we have something that says, well, there's more intelligence in AI than all of collective humanity put together. It's going back 10,000 years. So what do we?
We've never had this before. You can't.
What are we going to do?
Yeah.
Dan, this is
that's
everyone
not
we have on.
Okay.
Everyone we have on recently has been talking about AI and how much it's going to change. And one of the questions I have from this is, obviously, as you just said, why does he care about CPI? Who cares about that anymore? That's the old world stuff you keep saying. And what indicators or what metrics are going to matter moving forward? Because I feel like a lot of things that used to matter for macro and for whatever just don't really matter anymore. And I'm just curious, what matters to you now?
Well, I think if AI is margins should improve a lot. So companies, margins should expand. I think there are a lot of companies that aren't really tech savvy, so they're probably going to have a problem. I think people that think the U.S. stock market is going to start to underperform other stock markets, there's no chance of that, in my view. Most of the places around the world are not as tech advanced or as sensitive to introducing new tech into processes. So, I think China can do quite a lot, in the robotics area, but they don't really have a stock market. They, in the sense that people don't really trust their assets. When you make an investment there, investors don't know that your money is your money, right? If people can disappear in the middle of the night for 2 weeks, who run large companies there, foreign investors don't want any part of that. So, China can probably, in a massive way, adapt, this robotic AI agentic future. Europe, I think, is way behind. I mean, just in our space, look what happened. Tether decided yesterday they're exiting Europe completely because of these MiCA regulations. I mean, think about how phenomenal that is. They're exiting a whole economy that's the same size or maybe a little even bigger than the US because they don't want to be subject to those rules. That doesn't seem like a tech forward kind of place to be. You know what I'm saying? And so the people who are getting left behind, it's massively deflationary for them too, because they get crushed. And then the people implementing AI, their margins explode. And so, look, I think it's exciting and it interacts with blockchain as well. I think AI and blockchain, all these agents out there, the move to, the move for the analog world to the $800 trillion in assets that is out there in real estate, in bonds, stocks, all of those things is all eventually going to be put on chain. And I think eventually all of it will be fungible with each other, be tremendous opening up of liquidity, many assets that are illiquid, the whole movement into, RWAs. I think it's happening. It's still early. And then that will be integrated with the whole new world of cryptocurrency and decentralized networks. And I think they merge. And I think AI is going to, help make that happen. Also, I think AI is very obvious and speeds up the development of the blockchain world, because just think about like how difficult it is to move, I don't know, coins around in DeFi and all the different things you can do in DeFi. I mean, if you're a civilian, just a guy out there who doesn't even own Bitcoin, DeFi would like blow his mind. But the people who are active in DeFi are super tech and AI focused. So I think you get lots of applications of AI in the blockchain Bitcoin world, because frankly, in my experience, I mean, those are the smartest people I've ever come across. Not the 23-year-old pump and dumpers of meme coins, but I'm talking about, the guys out there building new chains, the guys running these major companies, Brian Armstrong, Arjun, at Kraken with David. You have, some of the larger companies, Mike Cagney at Figure, Pascal at Ledger. You've got guys who are running really big businesses. And I think, by the way, many of those businesses are going to become public in the next, 12 to 24 months. I think the US, as I said before, becomes the blockchain crypto capital of the world by encouraging all these companies to list on the NYSE or on NASDAQ. And I would hope within 2 to 3 years, we've got 30, 40 companies. Maybe, maybe they're not as large as Coinbase, but today Coinbase is the only public crypto blockchain company, of any significance and size. And so I see a migration of those companies, foreign and domestic, to get listings. I think it gives them huge credibility. And it also allows the traditional world access. It gives them comfort to buy, right? Because they can buy equity. Americans love owning cash flowing, successful businesses. They're not going to, harder for them to jump into a punk or a Bored Ape and all of that kind of thing. That's just, it's a little too degen for them. And I focus on there's 800 trillion in assets. And the digital asset ecosystem is worth like 4 trillion, just like 5%. It's very small, very small. And that's why my new fund's called 50T, because I think the value of the digital asset ecosystem generally can get to 50 trillion in the next 10 years. And that's still small, because you figure the old world will go from 800, call it, to 900 or close to 1,000 trillion. So it's still going to be only like 5 or 6%, but I think we can head to 50 trillion. That means Bitcoin, in my view, can go up to $1 million. It'll be $20 trillion of value. So I think that's where Bitcoin's heading. And then you have 10 trillion for the altcoins and everything else. And then you have, I think 20 trillion will be all the rest of the businesses, the projects, everything that is involved in this move of value on chain. And that's how I get 50 trillion. Some people would say, oh no, Bitcoin's going to be 50 trillion, but that would put it at a $2.5 million price tag. That's 25 times today's price. I mean, maybe it could. I think a 10x in 10 years is a lot more reasonable.
Absolutely. We only have a couple of minutes left, which, by the way, Dan, you make our job of hosting a podcast very easy because you sort of just like go through the whole thing and we don't have to say anything. We just sit here and nod our head and smile.
Okay, well,
maybe,
but some people, but some people in the comments are like, Dan, would you shut up already? Why don't you let the other guys,
Nobody's saying that, Dan.
Nobody's saying that. But we only have a couple of minutes, and I just want to, and feel free to say pass, and we'll end with something else. But the biggest crypto acquisition ever happened today, and you're actually involved in both parties. And I'm wondering if you can just share your thoughts on that, on kind of why or what your takeaway from it was, because you just talked about how there's about to be all these companies going public and acquisition. It's all going to be in the US, and we're seeing that play out today with our biggest acquisition ever by Coinbase acquiring Deribit. I'm wondering if you can just talk about that as much as you can.
Yeah, I think the deal will officially close in a few months. Yeah, I mean, look, it was a deal brought to us in 21 by an old friend who brought us in. And look, they have a monopoly on the options. I think they're 80% of total world Bitcoin and ETH options trading. I mean, it's mind-boggling. It's probably one of the most profitable companies in the space, after Tether. I mean, the net profits there are tremendous. I was anticipating holding on to the investment for 10 years. I expected, and I had a certain return profile for us, but we had a minority position, and the founders decided that they'd been in it for 10 years and it was time for them to sell it. And we're thrilled that Coinbase is on the other side. I love what Coinbase has done, what they're doing. They're definitely the leader in the US in the space. So it couldn't be a better sale. Again, I was hoping that I could hold it for longer. It's in all of my 4 funds. And, we've held it in some cases 3 years, in other cases 4 years. It would have been nice to have held it for 7 or 8 years because then our returns would have been higher. But I'm very happy, to hold Coinbase. I think that the Coinbase stock here is actually way too low, and it's going to be a significant part of what we do going forward. I'm always hesitant to talk about even more specific details because I'm always somehow saying something I shouldn't. I have my president of my company, who takes care of a lot of our legal, and my CFO, and they're always a little nervous when I do a podcast because they, sometimes
especially live.
They're actually behind your desk right now, right?
No, they're not. But they're not. But it's because I kind of say everything as it is basically, and
Dan,
I want to share a lot more information, but it's a pretty big. We invested 140 million into this company, and we'll make multiples on that. So it's a nice hit for us. And on the Coinbase side, I had an old friend and someone who I've known a while who was leading the charge on the Coinbase side too. So it was nice to be able to have contact with both sides. And of course, the banker did a great job to get this across the line. I think it just still needs some regulatory approval, but they announced it today, and it is, I think, the largest deal in the history of the crypto markets. We have another one, funnily enough, coming next week. I think it's public, so I don't know if I'm supposed to say it or not. Shoot me later. I'll have my president shoot me later if it's not. But eToro, which we own 10% of our fund 1 is in eToro. That's coming public on Wednesday, I think so. And apparently it's oversubscribed already, which is good to know. They priced it, I think, at a low valuation. Maybe I'm not supposed to talk about that. I don't know. But in my opinion, it is too low.
Dan, I know you got to go. But I want to ask you one question before you go.
Okay.
Which is, you bringing up Coinbase, and you're very optimistic and bullish on them. So are we. One thing that keeps coming up is, what's the best non-Bitcoin trade in this cycle? What's the best risk-adjusted non-Bitcoin trade?
You
in this
mean
cycle?
across the entire space?
Yeah, and I'm not asking you for specific.
That's very difficult because
No, let me give you a little bit more guidance here before you jump in, Dan. Is it a public company like a Coinbase or a Robinhood, who you believe has huge upside to crypto? Is it one of the leading L1s like a Solana or an ETH, or is it an app? And is it the app category? And I'm not asking you for a specific token. I'm more asking you, which category between those three are you more excited about in this cycle?
So, I mean, I just don't know, because the universe you're asking me about is so enormous today. I could, make something up and say something, but I don't. Look, I think each cycle has, these extreme focal moments. Like in 21, we had DeFi summer, right? Then we had like NFT extravaganza period, right? With the Beeple and all that other stuff. Then we have, stable coin explosion. Stable coin settled $10 trillion last year. 4 years ago, that was zero. Was stable coins, the theme of last year? Were meme coins a theme, and everything seems to go to an extreme, gets super hyped, and then comes down, and then over time reestablishes itself. I mean, DeFi is right now experiencing a super renaissance right now. I mean, revenues in DeFi in December were $230 million. That's up, over 10 times in the last 18 months. But that's happened very quietly. Like who's even talking about that? Now,
we are.
Look, I talked my book. You guys have. Okay. But I talked my book a little bit because I always say, and I say this really clearly, I say, I don't know much with a 99% degree of certainty. But I know with a 99% degree of certainty, okay, that Coinbase will not be the only large crypto blockchain public company in the next 5 years. And so this is a story that has not yet played out. This is a thematic that is not yet, it hasn't happened. So I think, look, we have my fourth fund launched our own SPAC. We have SPACs that are approaching our companies. In fact, the company that sponsors you, we're one of the largest owners of, Ledn. I'm on the board of Ledn, okay? So I know things about Ledn that I can't talk about here. So I'm just saying, like, if the US wants to become the global hub, to me, the way you do it is you encourage the companies to go public and list on our exchanges. That's how the world, with all that analog capital, can move in easily. So again, I am talking my own book, but I think it's consistent with what the Trump administration is trying to do. And I think we could have a little bit of an equity mania where, everyone is trying to go public. We have Circle, we've got Figure, potentially Gemini. Then you've got, who knows, maybe Certic, maybe, Chainalysis, maybe Fireblocks. There are a lot of companies making a lot of money. Maybe this is that cycle, right? I'm just saying there's a lot of growth in our space. The tariffs aren't impacting them. Monetary policy maybe is impacting a little bit with liquidity, but we know that's coming. RWAs, that's very TradFi focused, companies that are focused on that. Maybe there's a desire to own those types of companies like Securitize. So again, the only thing in my mind stopping that deluge is that just some of the companies are a little early, a little small from a revenue perspective. But again, I'm 100% talking my own book, but I've been talking my own book for the last 5 years. I thought when I launched these funds and had the idea for them in 2019, it was always my idea that this was going to become a big sector within the S&P 500. And in 2019, people were like, Dan, there are only 20 companies in your investing universe and they're all private. you're out of your mind. So I'm always being told that, but I think that's a future we could see.
For sure. Completely agree. Dan, absolute pleasure to get you back on the show. Thanks so much for your time and your energy today. Everybody listening in, thanks so much for joining us. I need to remind you quickly, none of today's show is financial advice. This show is for entertainment purposes only. Anything you are going to invest in is risky, and you should do your own research and think about it before you invest. Before I let you go, I got to tell you quickly that one more time, we are looking for a podcast host to join our team and help us host Milk Road Macro. So if you know a great host or you're a great host yourself, check out the link in the show notes and apply today. Thanks again for listening in, everybody. Have a wicked awesome day. We'll see you again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.